Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. And in this video, I'm going to talk to you about why I believe it's so important to embrace volatility when you are a trader or investor in the markets. Okay, so this is going to be more of a thought piece. I just wanted to make it because I've had a few people reaching out talking about how they're selling the dips and selling these corrective dips and kind of panic selling. So I was inspired to make this video because, again, this is probably, in my mind, one of the most important characteristics that you can possess as an investor. All right, so as always, we'll go over the points we're going to discuss briefly. This is going to be kind of a short one. Again, I was just inspired to make it because I think it is very important to have this information. So we'll just go over a few of the topics we have to discuss, and then we'll dive into each one by one. All right, so as always, if you guys go on to gain value or enjoyed this video, I'd appreciate it if you liked it and subscribed if you would like more content like it. Okay, so let's get into it. First things first, we're going to go over just a few key points that I have of why volatility is important. Those are just off the dome, so we'll go off those. We'll cover those right off the bat. We will then get into the definition of volatility because that's important to discuss. You know what? Now that I think about it, let's just go over that first, just because this is a word that is pretty specific to financial markets and finance in general. So it's important to know, though. So volatility, the liability to change rapidly and unpredictably, especially for the worse. So using a sentence, the succession of new rulers contributed to the volatility of the situation. So volatility, just rapid movement, upward or downward, for the most point downward. Okay. So that's what volatility is. We'll then go into the two examples, chart-wise or just asset-wise of very volatile assets that we've actually been focused on the channel. Okay, so just right off the bat, a lot of times these world-changing and revolutionary assets will be volatile. We'll get to that once I describe a little more, but the two examples that I have, the two charts that I brought up are Bitcoin and Moderna. So again, two very key assets that we cover on the channel, but they are volatile assets, so I think they're perfect for this video. Okay, and then we'll get into a beautifully written few paragraphs from this newsletter. I've featured this guy's newsletter. His name is Anthony Pompliano, but it's just a super well written blog, and I'm just going to read a few of these paragraphs where he talks about volatility. He actually just released this today, so it's like perfect timing. It inspired me that much more to make this video. So we'll go over, he talks about Bitcoin and Amazon as just kind of a, using Amazon as something to describe volatility, not just Bitcoin, because Bitcoin is currently experiencing volatility. But if you guys didn't know, Amazon in the early 2000s, like in the 2000s bubble, the tech bubble, Amazon was extremely volatile too. So we'll go over that because I think it's important to understand that some of the companies that are most well regarded, literally Amazon has the largest market cap in public markets in history. So I think it's important to know that companies of that magnitude experienced volatility in their early days because they're innovational. Okay, so let's get over here, and we will go over this the first cliff notes right here, again, right off the dome. So volatility key points. 1, innovation leads to volatility. Volatility leads to discovery, and discovery leads to price action. Okay, so again, these world-changing assets, these revolutionary assets that are highly innovational, highly, again, they're really setting a high bar and striving for something great. That is why they're world-changing, like Amazon, like we just mentioned. But innovation leads to volatility. So because it's not a super well-established product yet, so like Bitcoin or like Moderna, they are well-established, but they're not solidified yet. Okay, so that will lead to up and down movement, but that upwards and downwards rapid movement will lead to discovery. So when something spikes up, like Bitcoin or Moderna has before, it attracts the attention of new investors, and that attention ultimately leads to price action, whether up or down. Initially up, obviously, if something's spiking up, it will likely climb further up prior to again, so those weak hands selling and causing it to go down. But that is to be expected, and we'll get to that in this second point. So my second point is embracing volatility and developing strong hands builds character in this game. Revolutionary, world-changing investments are often volatile. They don't just go straight up forever. And when you can stick it out through the low points and not panic sell, you will be able to reap the rewards on the way back up. The strong and rational hands always get rich off of the weak and emotional hands. Okay, so again, the reason I made this video and was encouraged to make this video was because I had some people reaching out in regard to Moderna specifically, talking about how on these like 4 to 6% moves down, although scary, again, if you're newer, I understand it. I understand being scared of these corrective movements because I was the same way. And it's really just been paying my dues over the years and just learning from experience that that is not when you sell. So we'll get into that right now. We'll look at Moderna because we're talking about it first. So with Moderna in particular, you can see here, you guys know if you've been following it, like the track record of Moderna, how Moderna's been moving. Just in February, it was at like $18, and we've seen it climb up to $56, almost a 3x. Okay, which is crazy for an asset like this. Okay, for a stock, and again, it's well warranted. They're doing a great thing, but when something climbs up like this, again, even here, like when they had this first initial spike up to $36, like it came back down. But this initial spike up brought investors and traders into the space. It got them interested in Moderna as a potentially valuable asset. Okay, so again, it went through the spike. This is important to know, guys. Again, this isn't fact. This is just something I've observed over the years. A lot of times when we have a spike up like this, it will happen in two waves. Okay, so this is the actual news. And then this is the day, this is like the day after people realize the stock has gone up. Okay, so this is the news, this is the hype, and then it'll die down. The weak hands will sell, and then it'll start going back again. And again, a lot of times it is news based, but with Moderna in particular, the news is very crucial for this. But just remember that, guys. A lot of times things happen in twos, so in waves of two. It'll be this first wave, and then it'll chill, and then it'll have a second wave, and then it'll come down. And then the same, like vice versa, when it's going down, it'll usually happen in two waves as well. Okay, but back to the point, like you can't expect something just to, unless they did release news, Moderna for the example, unless they released straight up news that they had released a vaccine, successful vaccine that worked 100%, then it might go straight up and continue to go straight up for the foreseeable future. But in this case, where it is news driven and it's realistically still pretty speculative, you can't be surprised that it's having corrective movements. Okay, like just look at previous patterns. Like things don't, as good as you think the stock might be at the time, just because again you heard some good news or it's hype driven. A lot of times it probably will fall, but that doesn't mean that over the coming weeks or months, in Moderna's case specifically, it won't climb higher. So since this fall, when everyone thought Moderna was dead, again, it went from $22 up to $56. Okay, so it went on to 3x. It had this crazy correction, and then it went on to 3x to nearly where it is now. Okay, and that's kind of what we're experiencing now, you guys. Is just you can't like this thing has skyrocketed in the past couple months. You can't expect it to just keep going up unless, again, they come out with straight up news of releasing a successful vaccine. So these again, they can be scary. Even me still, I'm like, oh shit, maybe I should reduce my position. But honestly, on these dips down, I've been adding small amounts to my position on every dip down. And again, that's just years of being involved in these volatile markets. We'll get to Bitcoin right now because this is, again, one of the oldest markets I've been involved in. And this is arguably the king of volatile assets. So as you can see here, Bitcoin just popped off. It popped off. The TradingView app actually just updated like half an hour ago. But earlier today, it popped up like 12%. And that's huge. That's so huge for Bitcoin. But again, that's just like, that's coming off of a 50% retracement, a 50% pullback from here. It went from 9,000. Actually, okay, not, it went 50% down in one day. It went like 70% down in the course of a week. So if you guys are involved in the space, you would remember this 50% down day. It went from like $8,000 down to a low of $3,800. So it just tanked in one day. But You can see here it almost immediately got bought back up because, again, this is another good example right here, waves of twos. It had this first wave, which was maybe some of the smarter traders getting out because they knew something fishy was afoot. And then, boom, this is the fear. This is the emotion right here. This is the panic sell. And again, it's super scary, especially with Bitcoin, such an expensive asset. Again, you don't have to own a whole Bitcoin. You can own $100 or $10 of Bitcoin if you want. But a super high priced asset, 8,000 to 3,000 is a very, very scary drop. I was pretty shaken up by that. I was shook. But again, these are the weak hands that are selling, and those are a lot of yeah, that's the best way to describe it. Just weak emotional hands that sold there because, again, it did recover, and then now it's on the track to a full recovery and potentially entering a new bull market. Again, with this, you can't expect this to just go up forever. It could, over the next few days, have a little correction, but over the long term, we're playing the long game here, guys. It's something that's so important to understand. It's cool if you're a trader, if you're a day trader. That's great. I've mentioned this briefly in previous videos, but if you guys didn't know, I would consider myself a swing trader. I'm not a day trader. I do not like day trading. I've tried it multiple times over my investing career over the years, and it's just not worked out for me. Even when I think that I'm a little more experienced, I can probably get the hang of this, and I'll just catch on more. And if you really do, point is, the gist of what I'm trying to say is I don't think personally that it's smart to be a day trader. I found so much more returns in swing trading and holding positions and being steadfast in the positions that I'm super confident in and that will do well, and not panic selling and not having weak hands, but having strong hands and just bucking it out through the times that may seem hard and scary, because that will happen inevitably. Again, if you're involved in these markets, if you want to make money, if you want to make significant money, you have to be able to withstand the downs if you want to benefit from the ups. Okay, so that's very important to understand. We'll close it out by reading this again because I think this is very well written. So again, I'll just read a few of these paragraphs because that's all that is talking about volatility in this blog. Okay, so to investors, Bitcoin had a 50% drop in price in a single day this year. That type of volatility usually scares away weak hands and causes many investors to write off the asset. The people who have spent time understanding Bitcoin are unaffected by this level of volatility, though. Again, so see, the people who understand it, the strong hands, the hodlers, as they say in Bitcoin land and cryptocurrencyville, the ones who understand it, the ones who understand the true potential of it, were not scared out. So in that 50% drop, it was there are statistics, I don't have them up, but the majority of those were invested for less than 6 months, and they were just dumping the bag because they were probably over leveraged. But we won't get into the semantics of that, okay? This is because innovation almost always leads to volatility. My favorite example of this is Amazon stock. Every year since the company went public, the stock has drawn down double-digit percentage. The average intra-year drawdown is over 30%. Amazon stock even went down 90% plus once. But even with all of this volatility, Amazon has been one of the best performing stocks in the last 20 years, and it continues to grow. So again, Amazon, like $1.4 trillion market cap now. Largest company, one of the largest companies in the world. Pretty much the largest public company as a fact in the world. This is because innovation leads to volatility. Take early stage startups, for example. They're a liquid investment, so there's no public price discovery on a daily basis. If there was, the startup stock prices would be incredibly volatile. They could experience the highest highs and the lowest lows all in the same week. This is very different than larger publicly traded companies that are fanatical about hitting their projections and showing steady, predictable growth. We know that startup investing drives some of the best investment returns, though. Why? Because you need volatility to get price appreciation, just like you need volatility to get price depreciation. Volatility is not a bad thing by itself. People only hate volatility when it goes against them. Okay, so that's, again, people... a lot of times when you're new and you don't really you don't have a good grasp on this concept, you love it when a stock is climbing, but you're fucking pissed off when it tanks. And you just have to realize, you guys, that is part of the game we're playing. If you do want to play with these volatile, like, again, revolutionary, world-changing, innovational stocks, then you have to be able to accept the lows along with the highs, okay? Because that's just part of the game. So again, if you are a day trader, if you're trying to play the volatility, there are definitely ways you can play volatility. I have played volatility personally. in the past. I don't do it nearly as much as I do, again, just these weekly or multi-weekly positions that I usually take on. But again, if that's your, if that's your thing, go for it. Do to each their own. But that's just not my game. And again, over the years, I have learned that the smarter game to play is the mid to long term game. Okay, and hopefully you guys can trust me on that. Again, this game is such a learning game. As much research as I've done over the years, the biggest teacher has just been trial and error, and everyone has to pay their dues. So if you guys do have to pay your dues to learn, that's fine. But just trust me when I say, for me, the mid to long term game is what has provided statistically the most returns. I made way more money off the things I choose to hold than the shit that I've panic sold in the past, obviously. But yeah, we'll close it off there, guys. As always, if you appreciate this, I'd appreciate it if you liked and subscribed. Always feel free to drop a comment down below. Let me know what you think of this, and let me know if you want me to talk about any other more kind of like fundamental concepts like this. Yeah, I like making this kind of content, like the more thought-based content, because I do feel like it's really important. And as always, hit the links down below in the description if you want to support the channel in any way. Have some info products and Amazon affiliate links down there, books and whatnot, so check those out. And as always, guys, take action, make waves. Until next time, peace. See ya.